Hello, welcome to the weekly technical analysis review for Monday, April the 22nd. I'm Rafi Boyajan at XM.com. The pairs we're going to look at for this week are the euro dollar in the weekly chart, the pound yen, and WTI oil futures in the daily charts. Let's start first with euro dollar. We can see that in the long-term picture, we do have a neutral to bearish outlook. We do have very strong support at the moment at the 61.8% Fibonacci retracement of the upleg from 1.034 to 1.2554. So that's around 1.1186 and is near that 20-month low of 1.1176 from back in March. So if the euro-dollar pair does break below that key support level, it would shift the long-term outlook to a decisively more bearish one, and then the next key support would come from the 78.6% Fibonacci at 1.0814. On the upside, we are seeing strong resistance at the 200 weekly moving average. That's around 1.1340 at the moment. Breaking above the 200 moving average could help drive the pair towards the 50% Fibonacci at 1.1447. That's also the near the 50 period moving average, so making that an important resistance level. If euro dollar does manage to break above around 1.1450, that would help erase the negative bias, and then we could then see euro dollar aiming towards the 1.17 handle near the 38.2% Fibonacci, and clearing that hurdle as well would help shift the outlook to more a bullish one for euro dollar. Let's now turn to pound yen. It's looking rather neutral both in the short and in the medium term. For the pair, RSI has flatlined near 50. But looking from the stochastic oscillator, we can see that the risks are to the downside. Both the percentage K and percentage D lines are trending downwards. We do have near-term support at the 23.6% Fibonacci retracement of the upleg from 132.49 to 148.86. So that's around the 145 handle. If we do see pound yen breaking below 145, that would shift the near-term bias to a bearish one. And then the next key support would come from the 143 handle. That's the bottom of the Ichimoku cloud. And just below that, we do have the 38.2% Fibonacci at 142.60. If we do see further declines towards the 50% Fibonacci at 140.68, so that would determine whether the medium-term picture would remain positive or become neutral. So that's the next key resistance to the downside. But if we do see pound yen heading back up again, we can see there's plenty of resistance. First at the top of the Ichimoku cloud, which is around 145.60. Then we've got the 50-day moving average at 145.90. So clearing all of that would help shift the near-term picture to a more positive one. And then we could see pound yen heading towards that 4-month high of 148.86, which it needs to overcome in order to resume the uptrend that we saw between January and March. And finally, for today, looking at WTI oil futures, we are seeing prices at the moment at the highest, trading at the highest level for 2019 and the highest since November of last year. Prices have now decisively broken above the 61.8% Fibonacci retracement of the downleg from 76.87 to 42.53. So that underscores the bullish picture in the medium term. The next resistance would likely come from 66.70. That was a previous resistance and support level in the past, and then after that we do have the 78.6% Fibonacci at 69.52. To the downside, immediate support is at the 61.8% Fibonacci at 63.75. Slipping below that level would then see the 200-day moving average acting as support at just below the 61 level. Then we've got the 50% Fibonacci at 59.70, followed by the 50-day moving average just above the 59 level. If prices were to drop below 59, that would shift the focus back to the downside, and then if we do see extended declines towards the 55.65, which is the 38.2% Fibonacci, that would then signal a shift to a more neutral picture for oil in the medium term. In the short term, though, prices are starting to look overextended. RSI is currently trading in overbought territory. So that's it from me. Thank you much for watching and have a great day.